Okay, so learning objective 2, we're going to be looking at some manufacturing costs in more detail. And we're also going to be looking at some differences between what is considered a product cost because it's directly into the product, and a period cost, which you'll learn a little bit about soon. So let's move on. So first of all, manufacturing costs that you're going to see between now and the end of this course. So you're going to have to get used to it. Um, Manufacturing, actually, remember what manufacturing does. These are companies that create, design, and then they make the products. Okay. A lot of us look at manufacturing simply on the making side. Certainly, that's the most well known piece of it. But manufacturing is critical because they create products. And without the creation of a product, you can't manufacture anything because you don't know what the heck you're doing. Right. So that creation thing, and that's where a lot of patents are done, and we has as a country, the United States still has a very strong creative and innovative base. And so we might be losing some factory jobs. That's the making piece to other countries that can do it at a lower cost. But we are still on top of the creation and innovation piece, and that bodes well for us in the long run. Okay, so back down off the soapbox here, we're going to look at the fact that manufacturers start with raw materials, and then they go through a process to create finished goods that are ready for sale to you and me. So let's take a look at this activity and process. So three things that you're going to see over and over and over again regarding manufacturing. They have to actually buy the raw materials. These are direct material costs that they have to buy. So whether that's grain, whether that's so grain for whether it's cereal or beer for that matter, whether it's oil, crude oil for either gas products, Vaseline or other types of lubricants. It's actual the actual trees that will be made into wood products, etc. So there's direct materials that have to start this particular process. And then, of course, they need direct labor, because it's the labor that's going to convert all those materials into the goods that they make. And of course, they all need to do it within some type of factory and some type of facility that is going to have all these additional costs. Renting a building and paying for a lot of utilities and all this other stuff. So that's considered manufacturing overhead. So these three costs you're going to see over and over and over again. And so you need to become familiar with them. Okay. So direct materials, for the most part, for many manufacturers, it's raw materials, like I was mentioning. They can also be for those that are not doing anything with a particular raw material. They can be purchasing direct materials that are associated with a particular good. So, for example, a ball bearing for some engineering, type of product will suffice, right? It's not like ball bearings are raw materials, although they do start as steel, right? And then you have indirect materials. So they're not physically part of the product itself. And you can't really trace them because the association is so small that it'll drive you crazy. So when you look at when we use any indirect material in the production of a good, we usually stick that in the category we call manufacturing overhead. Unlike raw materials or direct materials that we can actually identify clearly and we know what the cost is, right? So these indirect materials are part of the overhead. Direct labor, these are folks that are directly creating the goods. So they are directly converting the raw material into the finished goods. They tend to be right on the factory floor, so to speak, doing that type of work. So they have a direct relationship in the creation of the product. And then you have indirect labor. So, factory workers that do not actually participate in making the product directly, but they might be, cleaning the factory or maintaining the factory in other ways that are not specific to the product, but need to be done anyway to make sure the factory is running well. And the big category, manufacturing overhead. So any cost that is indirectly associated with manufacturing a product, but part of that process is part of manufacturing overhead. So all the manufacturing costs that are involved in creating a product, except for the two you learned about, direct materials and direct labor earlier. Right. Manufacturing overhead is the more common term now. We used to call it factory overhead or indirect costs or burden, but manufacturing overhead is the current term. So again, these little insight boxes, at least in this book, I personally really like. I don't know if you've been reading these, but they're cool. This is on Whirlpool, which manufactures a ton of things like appliances. And so here you have a little story about prior to 2010, and this story this story's old in and of itself, but that's why you pay that high price for a Wiley textbook to get the most current information from 10 years ago. So prior to 2010 here, you had unemployment in manufacturing was falling every year for 60 years. But yet, what factories were putting, were able to do for output, were creating, was increasing every year, roughly by 3%. So you had a lower amount of people employed in manufacturing, but more goods coming out of factories. Okay, why? Well, because of automation. Okay, automation, the use of robotics in particular in manufacturing has basically changed everything. So now you might not need people on the factory line to do certain things because a robot's going to do it. And they're going to do it accurately. They don't have to go to the bathroom. They don't take sick days, blah, 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 blah. So instead of actually employing someone on that particular factory line to do what the robot is doing, the factories are instead hiring robotic technologists and technicians rather, to fix the robot and maintain the robot so it can continue doing its job. And so, things have changed a lot. So they need fewer workers, but automation is changing it and actually increasing the wages that are there. So factory work is certainly important because the average factory worker makes over $22 an hour, at least at this point in time, is higher now. And so this is important to remember. As new plants are being built, a lot of these plants are being built in the United States. It's not like we were losing all the jobs; we were just losing some particular jobs. It doesn't make a lot of sense to do everything based simply on the fact that this country has cheaper labor, so let's go there. As you'll see from this course, there's a lot more to think about than just that. Okay, as we'll go through it, you'll see the reasons. So we do have a lot of older and inefficient factories here. So as we build newer factories, as Whirlpool is doing, Caterpillar is doing, Dow, which is a very large chemical company, is doing. They're upgrading with automation, and the wages are increasing for those that do get jobs. The wages are increasing, okay, which is important. Okay. All right, so here's going to be This part is learning what a product cost is versus something called a period cost. Okay, so let's take a look at a product cost. So a product cost, it's an integral part of the product. So it's part of it. So we already got introduced to the components earlier, right? Direct material, direct labor, and manufacturing overhead. These three are always going to be part of this process, excuse me, and of this course. Okay. The weird thing is that's different from your financial accounting class is when a company has direct materials, direct labor, and manufacturing overhead, they actually are putting it into their inventory account. Okay. They look at it first as part of their inventory. All right. And that's going to be very interesting and different from what you learned in from a retail perspective. Right here, we're in manufacturing. Manufacturing looks at it a little bit different. It's not expensed. Direct materials, direct labor, manufacturing overhead are not expensed until they actually sell the finished goods. Remember, before you can have a table and chairs, it starts as a piece of wood and a bunch of people in a factory, right? They're creating this. So as they're creating all that stuff, that's actually, they consider that part of the inventory account. It's a subsidiary ledger, but it's part of the inventory account. So, and which means it's an asset. All these start as assets, they end as expenses. So a period cost has to do with everything that's non-manufacturing based, but part of selling the product. So the sales expenses, administrative expenses, things like that. Those would be considered the difference between a product cost directly into the product versus a period cost, which is perhaps helping to market and sell that particular product. All right, so this illustration I recommend that you have handy, okay, because you're going to need it for upcoming work. So when you look at all the costs that are involved in manufacturing, we break it into product costs. So these are directly related to the product, the manufacturing of a product, direct material, direct labor, and the manufacturing overhead, okay. And then you also have what we consider period costs, which are, again, all the other costs of the business that are not manufacturing oriented, okay, or not manufacturing based. So selling all that stuff and all the administrative expenses. I mean, you still need people in payroll, you still need people in marketing. I mean, you're not just going to build a whole bunch of tables and chairs and just leave them there. You're going to be selling them to stores, you're going to be, or opening your own stores and selling them yourself. You're going to be marketing all that stuff. You're going to have offices and distribution centers all around the country to get your products out. So those are non-manufacturing costs, which we call period costs. All right, here we go. Suppose, and I like that word. Don't you like that word, suppose? Suppose. I don't know. Suppose you do. Okay, suppose you started your own snowboard factory. Hey, that would be kind of cool. I would be falling off all of the time. I cannot balance. It's worse as I gotten older. I can skate. I can do skis, but I can't do snowboard. So suppose you started your own snowboard factory, KRT boards. Okay, don't get bored with your boards. Here are some of the costs that your snowboard factory would incur. Your job is to assign those particular costs. So let's look at number one. If you had materials of $30 that you needed to spend per board, how would you classify it? Okay. Well, you would classify it as direct material. Okay. It's a product cost. It's a direct material. Okay. Labor cost per board would have been $40. How would you classify that? Well, that's also a product cost. It's direct labor. So you would stick it under direct labor. We all catching on? These two are easy. Third one, we have factory equipment that has depreciated. Again, the critical component here is the fact that it's factory equipment. The equipment is being used to make the boards. So that would mean it is part of manufacturing overhead. It's part of the equipment that makes the boards, so it's directly related to the product, but yet it's a depreciation expense. You'll get used to this. Piece of cake. Here's another one, the property tax on the factory. So again, this is a tax expense. Yes, that's true, but it's specific to the factory building, okay? And so that makes it manufacturing overhead cost. Advertising costs, 60,000 a year. Well, advertising a product is not specific to making it. It's just after it's made, you tell everybody about it. So it's going to be a period cost. It's going to be that selling and administrative cost category that I had you outline or told you to pay attention to in the previous illustration. Sales commission, you need people to sell all those boards, and it's 20 bucks a board. So again, selling the board does not mean it's being produced, right? It's mean it's being sold. And so it's going to be a period cost. Here is an interesting one. You have the salaries of all the maintenance people in the factory though. So they're actually maintaining the factory. So that would be part of overhead, manufacturing overhead, because yes, they are indirectly related to the product because they're cleaning up the factory and making sure things run well. So it is product related, but it's not direct materials, not direct labor. It's overhead. We had to pay this plant manager. The plant manager doesn't do squat, other than sit there and say, "Hey, you dropped the board, pick it up." $70,000 a year. Well, it's not direct labor, that's for sure, but it is part of the product cost because they're managing the plant. So that's the plant is an old term for factory. Okay, plant and factory. Now you can say, as I always tell people, all insects work at the plant, but a lot of people don't. We work at the factory. Okay. And the cost of shipping those boards, of course, we ship them once we sell them. And so that's going to be a period cost. Okay. All right. So you're going to get to know, this is going to be something you're going to need to know and work on. You don't have homework on this. Over the weekend, I mean, what else do you have to do other than worry about product and period costs? I think it's well worth your time. You're going to be so happy. All right. So with that information, let's take it one step further. What would be the total cost of manufacturing 10,000 of those snowboards in your first year? Well, we have to go back and list what those costs are specific to manufacturing. So the manufacturing costs are going to be those direct materials, the direct labor, and the manufacturing overhead. So first thing is we had material costs, $30 a board. We're going to be making 10,000 boards. We need $300,000 just for the materials. We have labor, 40 bucks a board, 10,000 boards, $400,000 of manufacturing costs just for labor. And then we have factory overhead. Okay, when you look at factory overhead, notice there's a few of them. Depreciation on the factory equipment, taxes on the factory building, maintenance of the factory workers, and the plant manager. All of these are manufacturing overhead. So material costs, labor costs, manufacturing overhead is your total manufacturing costs, which would be, in this case, $846,000. Yes, you can write.
Is that always going to be the case, or are we going to have to break it down further as to percentage of time it took to make the board?
Nope,
or is it
not yet. Nope, not yet.
Okay.
We're going to get there, though.
I figured.
Yeah, we'll get there. But one step at a time, and this is where we're at. So yes, but you're thinking right. You're thinking right. So here's the do it exercise for part two, learning objective two. We have a bicycle company here who has the following costs. They have tires, salaries of employees who put the tires on the wheels. That's a very exciting job, right? You think your job sucks? Factory depreciation, advertising, lubricants, spokes, the salary of the factory manager, the salary of the accountant. You need handlebars. Well, that'd be a very interesting bike with that one. And the salaries of the maintenance employees. So, how would we classify them according direct material, direct labor, manufacturing overhead, or is it a period cost? Right. So, again, here, when you look at it, your direct materials would include your tires, spokes, and handlebars. That's how you make a bike. You would have your direct labor, or the salaries for the people who actually put the tires on the wheels. Let's hope they include the spokes and the handlebars as well. Never mind the rest of the bike. And of course, your overhead, manufacturing overhead, is directly related to the product. So the factory, anything regarding the factory, depreciation, the maintenance, the manager, all factory related, and the lubricants are required to help put everything together. That would mean that our advertising expense and the accountant are what we would consider period costs. Okay. So that's your first lecture on